All right, what's going on, guys? Terry James, your mortgage guy, coming to you. Just bringing you some helpful tips, as always, regarding mortgages, home loans, um, and a couple of things. So today, just want to talk about a couple of things, how we can pay your mortgage off, what that means, even how to pay it off quickly. Sometimes we need some real numbers to look at as far as just making a simple extra payment either a month or yearly, how that affects your mortgages and what kind of savings you will actually begin to have just by sending in one payment a year or paying a little more every month. Okay. And so, and what's real important about this is that when you make your extra payments, you have to make sure to mark it with the lender. When you make your payments, whoever you're paying, you want to make sure you mark it as a principal only payment. Okay. If you don't specify principal only when you're online, that payment will go towards principal and interest, and you'll be defeating the purpose of making extra payments on your mortgage. Okay. But one of the things is that if we sit there and let's say we use the number $500,000, you know, I love $500,000. You guys been watching me. And let's say you use $500,000. Let's say your loan is at 5%. You just got it this year and you want to say, okay, how can I pay this off quickly? So for example, if you make just one payment of an extra $3,000 a year, okay, so let's say you get paid bonus or your job pays you, you know, a Christmas bonus, or you get paid, you know, a little payout, you have a good commission month, whatever it is. If you take one payment a year at $3,000 and you put that into your mortgage, so rather than go shopping, maybe you don't take one trip, you know, save that, put into your mortgage, the benefit of it. So just by doing this one time a year, making one payment of $3,000 to, we'll say, a $500,000 loan, it's actually going to save 5 years off of your loan. So rather than paying off in 30 years, you're going to be paying it off in around 25 years. And the great thing is you're going to save about $90,000 in interest. Okay, so that's a pretty big deal. That's a pretty big number just by making one payment a year. And so now if you're already in a mortgage, you still can have the opportunity. All you have to do is put in a quick Google search of mortgage amortization calculator. Okay, that will allow you to put in your numbers. You can put in your current loan amount. You can put in how many years you have left. You can put in your interest rate and then say, okay, if I pay an extra $200, $100, how much faster will that pay my loan off? What kind of savings? So all this stuff is readily available. But I just wanted to kind of show us just so we have a visualization of what that means, you know, and even on a monthly basis. Let's say you don't get paid a bonus, but let's say monthly, you're able to set aside some money. Let's say you're done paying one of your car notes, you know, rather than take that extra payment from your car note, you know, and start splurging or spending money or putting it elsewhere, put that back into your mortgage. Okay. So if you take that same, we'll say $500 that you may have been paying on your car loan that's now paid off, you put that into your mortgage, and that will actually take off, at least in our example, it's going to take off about 10 years in your mortgage payment, which means that it's going to save you almost $153,000 in interest. Okay, these are some big numbers. These are real savings. And you can do this, like I said, once you pull up your own situation, you have a mortgage, you have 300,000, 600,000, whatever you have, you put in those numbers. But just by making an extra payment a month of $500 is going to turn into a huge savings for you. And so these are some benefits that and little tips that you want to take a look at sometimes and see, okay, well, what's the savings mean? You know, and that $500, like I said, you pay a car note off. Let's say you're done paying your car. Rather than use that extra money and start spending, go shopping, taking a trip. Let's say you don't take one trip a year and put that into your mortgage every month. And now we're talking about the savings that you're going to have on your mortgage. All right, so these are some good tips that you can take if you haven't bought a home. You have my contact information. I'll be glad to help you. But if you already have a home, definitely look at these tips so that you can look at saving and bring more interest and more money to you, and then pay your loan off even faster, because ultimately that's what we want to do when you get a mortgage. You want to get that mortgage down, you want to try and pay it off, and you want to get those savings for you. All right. So I hope this has been helpful for you. Once again, Terry James, make sure you guys hit the subscribe button, hit the like, and hit me up with any comments if you have any questions or anything like that. All right. Until next time.